Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on commodities here. We'll start it off with the weekly time frames longer term and the dollar. So the dollar made a key break of resistance. Not a lot of follow through here on the weekly time frame, but we broke 96.98 and it was the highest price we've seen in about a year and a half. So that's certainly notable. And the weekly time frame, any consolidation above 94.79 keeps the higher lows intact. So the bulls definitely want a more convincing bull break. We only got over it by 22 cents or 0.25%. But as long as we hold that higher low, the bulls do have full control of this weekly time frame. The daily chart had a significant pullback, but the bulls did buy that dip. So they're trying to form our daily higher low, as the last daily higher low was all the way down at 95.47, trying to form another level here at 96.20. And the hourly trend did change enough for us to say, all right, that is our daily higher low. And I would expect the dollar, well, actually, we have the FOMC Wednesday. So FOMC is going to have a significant reaction with the dollar and gold and miners. So I was going to say that we could trade within this range that the daily chart just established pretty much all of this coming week, but with that added volatility, that might not be the case. But bottom line is, daily chart and weekly chart still in an uptrend. Gold on the weekly chart also has an uptrend with a couple higher lows to be watching. And we did consolidate this week, but the bulls are holding on really well. And the bulls do have to be pleased with where they stand comparative to what the dollar has been doing. Again, the dollar just hit the highest price in a year and a half 2 days ago. And obviously gold is not down at the lowest price that we've seen recently. So we do have a potential weekly higher low here. The daily time frame needs more follow through. We only have seen 1 day bounce off 12.11, and if we get daily continuation and break 12.43.29, then we'll say, all right, our weekly higher low has been established. And at this point, it is healthy consolidation. So pretty much the reaction to Wednesday FOMC, we're either going to see higher highs or we're going to head back down to this daily support level. Checking in on the miners, so GDX, we pulled back more significantly on these miners, and I believe that that was due to the sector, or I should say the market weakness in the S&P 500. So we have a weekly higher low, 1864 on the weekly for GDX, but the bulls have a ways to go to get back to 2051, and we're going to have to likely set a lower high and then a higher low and then get a bull break if the bulls are going to get this daily momentum back in their favor. So keep in mind that the miners pulled back more significantly than gold did, so that correlation is not always a 1-for-1 in terms of the miners going up in step with gold. But we have to see the daily chart after such a significant pullback set a higher low and then a continuation move. And you can see that the bounce that we're seeing is fairly correlated with the S&P 500, and so is the weakness. So the break of the correlation to gold with these miners was due to that market volatility, in my opinion. GDXJ, same thing, higher lows on the weekly. Support now is 27.14. The daily bounce is much weaker at this point. So we have a lot of work to do to get back to 30.30. And at this point, we're talking about 8% or so. So we have to change this daily momentum back for the bulls. The bears definitely have control at this point of these miners, and it is going to require continued market bounce. And a pretty much ideal scenario would be for the market bounce to continue into this coming week and for gold to have a bullish reaction to the FOMC and the dollar to have a bearish reaction. Checking in on oil. Oil has made a significant support break. This is the most bearish action we've seen on the weekly chart since back in June of 2017. So that's almost a year and a half, a year and a third, we'll call it, with the weakest action, a big pullback, and this does correlate to the S&P 500, except the S&P 500 has already started bouncing, and oil certainly has not. When oil does bounce, we are absolutely going to anticipate a lower high compared to 76.88 because we now have a trend change underway. 63.62 is a support that also broke, so the next support levels are down at 61.84 and then 60 psychological. We are getting oversold here on the daily time frame. The daily chart RSI is down at 26, and it's definitely time to be looking early this coming week for a daily oversold bounce. Anything under 67.92 will just be another lower high on the daily. This bear flag on the weekly time, or I should say on the daily time frame, was also pretty clear as we headed into this week. and might have to go back and watch the video from last weekend I did to make sure I highlighted that. But we're looking at the 4-hour RSI, pretty beat up as well. That's down at 25. So if we were to start Monday with weakness, I would be potentially looking to buy, but just be aware it would be for a short-term flip because that weekly trend has changed. So any bounce on the daily time frame, we would still be anticipating a lower high compared to 67.92, and the bulls are not close to changing that daily trend back in their favor with the week close at the end of the week. So the energy sector with weakness now, let's look at it on the monthly time frame and see if this is going to be a potential precursor into market weakness. This monthly uptrend breaking for the first time pretty much since the 2016 lows, which was the lowest price we've seen in a long time. But the market has not lost the monthly uptrend yet. So let's see if this is a little bit of a glimpse into the future and perhaps a canary in the coal mine for the market as a whole, with this monthly uptrend now being lost in oil. Natural gas is a weekly potential bull flag. Very healthy consolidation at this point. Remember, we're breaking out to a range we have not seen in many years, looking back 3+ years. And we got that bull break and then healthy consolidation. So bulls were buying the dip, and we are looking to change the trend here on the daily. Healthy consolidation, nice and contained. We established the low and then the high of the bounce and then a higher low. And now the bulls need to see a break of 3318 to change this daily trend and to have it say us saying, okay, this is a weekly bull flag, and we're looking back now to the high of 3049. So very healthy follow through on Friday. Bulls really turned it around, and it's all about 3318 first thing this coming week. A break will give a lot of confidence, and you can see the solid volume as well. We'll switch over this contract soon, but I always look at the contract daily volume, and I chart the futures contract that has the most volume. So it is still NGZ at this point before we go over into 2019 names, and we will see if the bulls can break that level first thing. So I appreciate you watching. Hope you have a good rest of your weekend. FOMC 2 p.m. Wednesday is going to be the highlight of the week. We'll see how everything reacts.